We are so f***ed that you're going to have to take risks, but we've been given the gift. That whole retirement crisis video that I did way back when, I said, listen, the gift is crypto. That was 2016 or something. And that gift is the gift that keeps on giving. It is everybody's chance to get ahead. It's so important that you don't mismanage the opportunity. Many people did that in the last cycle, and I'm trying to help people this cycle. Own the main assets. Don't trade around. Don't have FOMO. Don't use leverage. Just hold it. Just give yourself 10% of your bag, or 20% if you're really a true degen, to allow yourself to invest and lose money and try and make money in the 100x's. But don't touch your other stuff.
Over the past year, Raoul, CEO and co-founder of Real Vision, has been delivering a crucial message to investors: prepare for the fourth industrial revolution, or the exponential age. He emphasizes the significance of this new era, highlighting observations such as unprecedented money printing by central banks and the pandemic-driven acceleration of technological adoption. Powell's analysis reveals that the perceived bubble in asset prices is contextualized by the depreciation of the dollar against the backdrop of expanding balance sheets. Powell's insights lead him to foresee continued exponential growth in the valuations of key technologies over the coming decade. He urges investors to position themselves ahead of this revolution before prices escalate further. Powell's perspective is rooted in the belief that a global economic reset occurred in 2008, with major economies grappling with stagnant demographic and productivity growth alongside mounting debts. Against this backdrop, Powell argues for the importance of increasing productivity growth, highlighting the role of crypto technology and the exponential age in driving innovation and economic progress. Before we continue with the rest of the video, do check out daily 5-minute crypto newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
The Everything Code is really all about understanding that they are paying the interest on the debts by issuing more debt, and that ends up in the bank balance sheet. It was also the understanding that the world has become entirely cyclical now. The ISM cycle is perfect from one to the next. So we've got this amazing 4-year cycle. It's actually 3.5 years. And that was in fact driven by debt maturity. What we found is that after 2008, well, 2008 was a great reset, as we know, but it was also a debt jubilee. All of the major central banks around the world agreed to forego interest payments. That's what zero rates are. So they said, we don't need to pay interest payments because we need to rebuild our balance sheets. So they rebuilt their balance sheets by refinancing in the 3 to 5 year sector, and that's created this perfect cycle. This cycle, which is the presidential cycle, the Bitcoin halving cycle, it is the Everything Code cycle. And that cycle drives everything. It's why I've been able to do so well in predicting where markets are going, because that cycle is the liquidity cycle, the debasement cycle. It's all one thing, and it drives assets. Once you understand that, you understand most of the game that lies ahead. Now, this is not the first time this has happened either. The 1950s were remarkably similar. This time around, it wasn't a demographic bust that caused it and the debts that came because of demographics. The last time around, it actually came from, obviously, World War II and those debts. But what did the governments do? In the US, they imposed yield curve control, which is financial repression, which is the same as adding things to the balance sheet. So they kept interest payments low. The economy, they restructured debts. The economy became perfectly cyclical, just as it is now. It's almost identical. And asset prices correlated entirely. So they ripped higher, corrected, ripped higher, corrected every cycle, as they're doing now. So that whole 1950s thing actually plays out perfectly in the equity market. When I look at the chart of now versus the 1950s, it looks very similar. And when I zoom out, it kind of suggests what's going ahead. You see, in the 1950s, their piece of magic was to keep financial repression going, keep the cycle going until productivity increased. And eventually productivity increased, financial repression helped to wear down the debts, and over time the economy took off, and we had the 50s and the 60s and then into the 70s. And that was a magic period for GDP growth because of what they did. And they're repeating it now. It's very clear to me that that is the game. That is the game the Japanese are playing, the game the Europeans are playing. Everybody's playing the same game. So we know the game. We know debasement of currency is the other game. So here we know that if we don't play their game, you're going to get if you invest in assets that don't beat the balance sheets, the 15% a year, you're going to be losing money every year. So it's really important that that is your hurdle rate. And when you look at that, you suddenly realize that most assets don't beat it. The S&P doesn't really beat it. Gold certainly doesn't. Real estate unlevered doesn't. Most things don't beat that debasement. So if you invest in other things, you're going to lose money. And that's a hard lesson for people to learn. Most people don't understand this simple fact, is you are getting poorer by investing in these things. And that was the big realization that got to me. It's like, oh my God, my whole macro world has been turned upside down. Because everything we thought was the investable asset became the non-investable asset. And everything we thought was non-investable because it was riskier became the asset. Because when you look at everything versus the Fed balance sheet as a simple example, there's only two assets that have gone up. And I've talked about this at length before. It's technology and it's crypto.
A renowned investor, macro analyst, and former Goldman Sachs executive, Raoul sees the cryptocurrency industry as a rare opportunity for investors to generate substantial wealth. He emphasizes that this isn't merely about making a few $1,000s here and there, but about securing life-changing returns that can counter the gloomy global economic outlook and pave the way for generational wealth. Powell believes that this opportunity is unique to cryptocurrencies and other digital assets. Powell's outlook on cryptocurrencies is profoundly bullish, both in the short and long term. He predicts that the industry will grow tenfold to $1 trillion within the next few years, with a potential surge to $200 trillion thereafter. However, he expresses concerns that some cryptocurrency investors may jeopardize this golden opportunity by resorting to leverage and chasing exaggerated returns, potentially losing sight of the fundamental strategy of buying and holding on to their main assets for extended periods.
Since I first started talking about Bitcoin, it's up 450,000%. Most people just still don't get why I care about this. It's because it's the only way I see to truly give yourself the opportunity. And this is, you can see this behavior of investing in risky things by the speculative economy that has taken hold that people can't understand. It makes total sense to me. If your future is because you're young, you are going to do what you're supposed to do, buy your 401k, that kind of locks it in because it's not underperforming the balance sheet, it's not outperforming. So that's savings. Okay, I get that. And it's better than saving in cash. But everybody knows they can't get ahead. So people have become speculative. Speculative is okay if it's not at the casino. If it's in a secular trending market like crypto technology, go for it. Just do it in the right way. So we see the rise of not only tech investing on Robinhood, but option investing on tech in Robinhood. That's the way, the lottery ticket economy, where people just don't feel like they have a choice. There's no way for them to get the 100, 200, 300 grand that they need to get in the property ladder, or to feel like they've got the savings they need. So people are taking bets. But in a secular market, actually pretty intelligent risk taking. And options are pretty intelligent too. Over time, if you get it right, you have the right tools, you learn how to invest. It's one of the core things that we do at Real Vision is try and teach people how to do this. You can make money. Crypto has been even easier because the sheer magnitude of the moves means you just buy and hold it. You just own the highest quality assets and do nothing. I mean, doing nothing is really that easy. Has been basically giving you about 100% a year returns for the last 7 years, 8 years. It's actually higher if you go back earlier in Bitcoin's time. But if you basically look at that, you're going to get somewhere between 80 and 200% returns, depending where you are on the cycle over time. So these are the compounded returns. These aren't just, year in, because obviously some years you're like 500% returns and other times you'll make down 70%. People don't get their heads around, but this is actually the best risk-adjusted reward asset of all time. Fidelity have this beautiful chart of of all of these dot plots of risk-adjusted rewards of assets. And there's like, tech is quite high, and some markets are high, and then cyclical stuff like oil and stuff is low risk-adjusted returns over time because it doesn't really do anything. All of this, S&P, all in this. And then you go and there's a blank paper, and somewhere right at the top is a dot that says Bitcoin. It's a f***ing alien. We have never been given an asset like crypto that has this risk reward by any yardstick. Drawdown versus, drawdown risk, volatility adjusted, any way you want to look at this asset, as long as it's over a period of time, it's by far and away the best asset we've ever been given. It's also the best performing asset of all time and remains the best performing asset. Every 4 years of that everything code cycle, Crypto Spring, which was last year, best performing asset in the world. Crypto Summer this year will be the best performing asset in the world. Crypto Fall next year will be the best performing asset in the world. Crypto Winter, which is 2026, will be the worst performing asset in the world. It's kind of simple. You don't need to do anything. You just need to buy it and hold it.
The foundation has been set for the cryptocurrency industry to experience continued growth and evolution in the coming months, years, and decades. However, according to Powell, the defining factor lies in the imminent macroeconomic surge, where global money supply is expected to explosively increase as central banks strive to salvage their economies from collapse. This conjunction of factors, including rapid money supply expansion and the emergence of various technological platforms, underscores the cryptocurrency industry's pivotal role. Cryptocurrencies emerge as the frontrunners in this race, boasting unprecedented speed of adoption with over 400 million users in record time, surpassing the adoption rates of any previous technology. Bitcoin, the flagship cryptocurrency, has rapidly ascended to mega-cap status within just 15 years, outstripping traditional giants like Berkshire Hathaway and Meta in market capitalization. Despite facing relentless opposition, particularly in the United States, the industry has proven resilient, emerging stronger from every adversity. This resilience alone serves as a compelling reason to maintain a bullish outlook on the forthcoming crypto and macroeconomic cycles. Raoul Pal's optimistic stance on crypto, tech stocks, and macro trends for 2024 and 2025 invites discussion and speculation. Feel free to share your thoughts, predictions, and favorite crypto assets in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.